The second quarter of 2025 continued to reinforce the value of income investing in a late cycle environment. Despite mixed economic signals and elevated market uncertainty, Matco's Diversified Income Fund delivered a return of 1.7% year to date. More importantly, the fund has maintained its steady 4.25% distribution yield. This remains a core component of its appeal, providing consistent income and downside protection. Now let's begin with the interest rate backdrop. Interest rates have remained relatively stable this quarter. The Bank of Canada last cut rates in January of 2025, lowering their overnight interest rate to 2.75%. Since then, it has held rates steady at 2 consecutive meetings, closely monitoring both growth and inflation pressures. We expect 2 more rate cuts before year-end, bringing rates to a more neutral level. Now, on the other side of the border, stateside, the U.S. Federal Reserve has kept rates unchanged at 4.5% so far in 2025. This follows its last cut, which was in December of 24. The Fed is taking a cautious stance, waiting to see how the data evolves and uncertainty that tariffs may increase inflation in the coming quarters. The market currently anticipates 1 or 2 cuts later this year. Now, across both countries, the bond market is responding pretty favorably. Yield curves have begun to normalize. The Diversified Income Fund is positioned with medium duration exposure and a meaningful allocation to government and investment-grade corporate bonds. This is both directionally benefiting. Now, credit spreads, while still tight, remain supportive of high-quality issuers. Our approach has stayed consistent. Emphasize companies with strong cash flows, relatively lower leverage, limited exposure to trade-related disruptions. With economic growth slowing, discipline in credit selection is more important than ever. We've also maintained exposure to our CMLS mortgage investment, which continues to deliver an attractive yield and strengthens the overall income profile of Matco's Diversified Income Fund. Key positioning highlights for the fund. First, medium duration bonds positioned to benefit from potential rate cuts. Second, emphasis on investment-grade corporate credit, avoiding high-risk sectors. Third, balanced exposure to federal and provincial government bonds, both for stability and for income. And last, continued exposure to mortgage investments for income enhancement. Now, as we look forward to the second half of 2025, we believe fixed income markets offer a compelling balance of yield, stability, and downside protection, especially in contrast to the more volatile equity markets that we've experienced year to date. With commodity-linked inflation lingering and geopolitical risk still present, the case for diversified, actively managed income strategies is as strong as ever. Matco's Diversified Income Fund is positioned to weather continued economic slowing, benefit from those falling interest rates, while providing investors with dependable income and strong risk-adjusted returns.